Hello, welcome to a full breakdown of my model. This video will be dedicated primarily to helping you understand how to trade my Arcane A plus model. This model will be the primary one or the one that has the highest win rate, I would say, out of most of the models that I currently have developed. I currently have about 5 models in total that I utilize, and this one is probably one of the best. And I think based on data, I adapt relatively well. I have developed and gathered over 7 years of data across all type of market condition. When you are building a model, one of the things that I truly believe is important is ensuring that the model that you're building can actually stand the test of time. So if you're testing a model, especially one that you maybe found from any influencer on YouTube, I really challenge you to do this. You take that model and then you go and then you take maybe 2017, 2018, 2021, 2023, and pick random month across different years. If the model fail consistently when you pick random month across previous years, where you see 4 losses in a row, 5 losses in a row, and you just cannot find some level of consistency with that model, regardless of time, then that model is not necessarily adaptable to any market. So the reason why I have this tagline of the only model built to adapt to any market is because it does adapt to all sort of market condition from the data that I have gathered. It typically stays between, I would say, 75% all the way up until, I would say, on the high end, 85, 87%. So on average, you really are looking at 83%, regardless of the market condition that I have experienced and backtested as well. And I'm still continuously backtesting, gathering data, and sharpening my ability to read the market with this same model. And like I said, I have multiple model and that I will eventually make videos on and breaking it down just as this one. And all these model stem from Arcane concept. What is Arcane concept? You may be asking. Arcane concept is a suite of model that I essentially have built and created. Some of them were ICT inspired. A lot of them were completely novel and very much innovative in a sense that they are very much objective in the way that I designed those models, I designed some of these concepts. So it means that when you hear objective, it means that if I give the set of rules or if I give this concept to other people, they can build model or they can take setup that will look exactly the same, if not similar to the way I operate or the way I execute. There's not a hard analysis process or bias identification process in a way for you to get into the market. Most of these models that I have developed are intraday focus, right? They're not necessarily, they doesn't force you to comment at a higher time frame and essentially have to do a lot of high time frame developing of your bias and then going down to the lower time frame and trying to like do all sort of an analysis. It's very much straight to the point, 2 time frame at most, and then it's just straight to the point, right? So with that said, without any further delay, let's go ahead and get into the video. This is what the checklist is actually going to look like, okay? The model execution checklist is going to use 2 time frame. Sometimes you can use 3 time frame, which is going to be the 1 hour, but you're only going to use that additional time frame primarily for identifying gaps, right? Fair value gaps on the 15-minute time frame and then the 1 hour. The reason why I love this model out of all my model actually is because you use a 15-minute time frame, you really stay on the high time frame, primarily the 15-minute time frame to observe for price to create 3 things. You want price to create what I call a high probability objective, right? You want to make sure that you have a draw, you have a high probability objective. This is what many IC trader will call the draw on liquidity, right? I call it my high probability objective because it is very much objective, right? High probability objective. That is going to be intraday, meaning that you can come on any specific day. If you see that your session, any session high or low, has failed to grab a specific zone, right? Then you will have a high probability objective for that day. What are those zones? Those zones are what I call major psychological level. In a minute and a few seconds, I'm going to show you on the chart what that actually looks like. So whenever you mark out all your session level, right? Any trading day has 3 major sessions. You're new, you don't know this. Any trading days has 3 primary session, right? You may have that early, session or whatever that may be, but the main session that you really want to focus on is Asia session, right? London session, and third and not but not least, New York session. New York is the biggest session out of all three because you can divide New York session into the AM session and then the PM session. The AM session, really, the true open of New York is 7 a.m. all the way up until 12 p.m. Some can push it to 3 or 1 p.m., I would say. And then the remainder of the day is essentially the PM session for New York. So those are the three main sessions that you'll have in a day. Now, on the chart, you want to identify the highs and the lows of these three sessions, and that's what we're going to be focusing on. So I wanted to make sure if you're not aware of that, that's something you need to pay attention to. Next up, you need to mark out all the 15-minute fair value gap that are going to be on your chart, right? All the gaps. We're going to show you a few examples of what that looks like. A fair value gap, if you're not aware, if you're brand new to ICT or brand new to liquidity concept, is a three-candle pattern where the second candle in that three-candle pattern leaves an imbalance or leave a massive space in between the first and then the third candle on the body of the second candle. I'm going to show you visually in the next few minutes what that actually looks like. Third, you're going to wait for a fair value gap, right? Opposing to your draw, opposing to your target or your high probability objective to be tagged. Once that happens, that's when we can essentially zoom in onto the 1 minute time frame and then refine for our entry, which is going to be a unicorn breaker, or I like to call it for my within the concept that I trade because the way I identify it is a bit more unique, arcane breaker. So that breaker needs to form in our strike zone, 938 to 1222. As long as it forms within the zone, you are golden. Now, as a final confluence, you need to make sure that the MPL, right, another major psychological level, also overlaps with your unicorn breaker. Okay. As soon as you have that, then you have an entry. And last key notes here is that there should not be any 15-minute fair value gap in between your entry confirmation and then your high probability objective. So those are the 4 key steps / 5 steps, right, that you should be following. With that said, let's go ahead and jump into the chart and see how that actually looks like. All right, perfect. Now we are on the chart. I'm going to show you an example of a trade that I have taken on NQ actually back in December 10th. And this trade, I believe, was called in my Discord hub, where I essentially gather and save all my data and I call edit everything beforehand. I also have a live stream every morning from 9 a.m. or 9:30 sometime all the way up until 12:30, 1 p.m. If the setup that I have obviously closed before 12:30 or 1 p.m., then I'll typically end it around that time. But there's a few times when we have a position that run beyond that, and then the stream end up actually lasting a lot more. But everything is called beforehand, so you guys can see the execution live and full in display. With that said, let's take a look at what we have on the chart here. So first of all, I want to draw your attention to the session levels, right? I have already marked out all the session level, but you have Asia, London right here. Essentially, Asia high and London high are overlapping with the highs. You have New York high right here. You have London and New York low right here. Now, you might be wondering, how am I able to mark these automatically? Is because I have an indicator on. The one that I like to utilize and I recommend you utilizing is what it's called FX Market Session by Boitoki. This is the one I would highly recommend. If you click on this right here, it should pop up on your chart and you can go in here in the settings and you can essentially set the settings, you can change the color and everything else. So for me, London is that light blue color that you see here. That's what I like. I'm kind of like already accustomed to that color. New York is orange, the light orange that you see here. And then Asia is a purple. And then you have Sydney, but I turn off Sydney because Sydney does not really matter for trading. When you come onto the chart, once all these have been essentially displayed on your chart by the indicator, all you have to do is just click on this tool right here. You can click on the horizontal array, as I have already done here. When you click on it, it should look like this. You take that horizontal array and then you target it on top of the line. Once you tag it on top of the high or right next to the high, you should see exactly all the way to the left here what level is actually going to be showing. So Asia and New York, and London high, which are overlapping here, are at 25,995. New York high is currently at 25,970, right? New York low is at 25,812. And then those are all the level. Now, you might be wondering, why am I not mentioning about Asia low right here? Well, it's very simple. It's because, as you can see, price action candles during London session took out this low, so it's no longer valid. Therefore, that's another rule that you need to keep in mind. For you to consider a level for potential draw, you need to make sure that the high, the low of that session has not been taken out yet by the subsequent or the following session, right? So if the subsequent or the following session has taken out either that high or that low, you need to omit that from the potential high probability objective. Very key there. Next up, we need to highlight the major psychological level. This is a fun part. Remember, I mentioned earlier, I'm going to show you exactly what those levels are. So, for example, my indicator here already marked it out, but you see, as you can see here, 26,000, right? 25,900, 25,800, 25,700, and then above here, 26,100, 26,200. So as you can see, it's those level that ends with 2 zeros or 3 zeros. Those are extremely powerful level. Now, if price come within 40 points of grabbing it, like when I say price, I mean session levels, right? Session highs and lows that are still intact. If those session highs come within 40 points of grabbing it, so that means that this level right here, 26,000, you go down to 25,960, this will be 40 points. So if any session level come up to this level, to this zone, and drops down, right, and then fails to grab this, then it makes this a draw, right? It makes this 26,000 a draw. So I can essentially do this. I can make this here, and I can just type up MPL HPO, and then parenthesis for the ICT people, this is going to be our drawn liquidity as well. So as you can see, New York high failed to grab it, it's within 40 points. Asia and London high failed to grab it, and it's also within 40 points. And then London and New York low that are overlapping down here also failed to grab 25,800. Okay. Now that we have that, okay, let's go back to our list. So next up, we need to essentially mark out all the 15-minute fair value gap. And then we need to also highlight the session. We have highlighted all the session high and low that have failed to grab 40 points. So we already have our half of the objective or draw highlighted. Next up, we need to mark out all the 15 fair value gap, right? That's on our chart. And then we are going to ensure that one of those gap got tagged in the direction of our draw. So let's go ahead and check that out. What are some of the gaps that are still potentially still valid, right? That we potentially might be tagging right now. So we have this massive gap that I have all the way down here that we're essentially jogging into right here. Okay. What other gap do we have here that we potentially might be tagging? We have a small, tiny itty bitty gap right here. Is it a gap? Nope, that's not a gap. What else do we have? Okay. Don't think we have anything else besides this massive gap here. And then all the way above price action here, I don't really see anything else, right? So we're touching this gap, and then our window of entry is between 938 and 1233. So this is the only gap that we're touching. This is actually a bullish gap. So we can make this maybe green so we're aware it's a difference. Right there, boom. So since we're tagging this, the draw that's really going to be the one that we need to pay attention. So if you're tagging a bullish PDA, right, a bullish 15-minute fair value gap or bullish high time frame gap, that means that you need to be focusing on what? On bullish target, right? On highs. So what are some of the highs that we have as draw here? We have this, and then this. But since all these failed to grab this MPL, our actual draw is not going to be those session level. It's actually going to be the MPL, right? The MPL is always going to be our draw. So I'm going to just make sure the text right here are going to be to the left, so it's easier to remember or kind of see that or visualize that. And since we have that, we can kind of turn off these. So we have our draw here. Actually bring it back to the center that we have that off. And then boom, it makes our chart a little bit more cleaner. Okay, number 3, we need to drop onto the 1-minute time frame and then wait for a unicorn breaker to form, right? Within that window. All right, perfect. Currently, we are on the 1-minute time frame. And this green line that you guys are seeing here is that 50-minute fair value gap. So I'm going to turn off the indicator now. So we don't really need that on the chart anymore. We have our draw and we have all we need here. We also have no 15-minute fair value gap in between our entry and our target. So if you check right here, as we're dropping here, right, there's no 15-minute fair value gap, that are untapped gap in between our drawn liquidity and then potentially a reversal of the zone. So we're going to keep playing price and see when we get a unicorn breaker. And we get a unicorn breaker at 11.11 right here. So once we get that, I'll go ahead and enter my long right here of this entry, stop loss behind the bodies of that unicorn breaker. And I'm essentially targeting 1.5 R or 2 R. Since this unicorn is extremely small, I can definitely target 1 to 2 R conservatively. And then my final target will be my draw right here. So most of my position can be off at this level right here. And then I can let the runner run to this final target, right? So market and one buy right here, stop loss at these lows, bodies, and then 1 to 2 R. So I'm gonna play it and then see what happened. TP hit. And this would have been the trade right here following the Arcane model. Just to recap, I'm going to let it play out so you guys can see what happened after it, and we eventually hit our final target right there. Boom. And this draw, 90% of the time will be hit, right? If you follow these steps that I just outlined in this video, this will be hit. You just got to make sure you are patient and then you're not forcing it and you're not skipping any of these steps. Okay. Again, if I go to the 50-minute time frame, I want you to pay attention to the liquidity, right? In between our entry and our target. So in between this zone right here, I'm going to just do this, boom. And this right here. I really want you to pay attention to this. Do you see any 15-minute fair value gap that are untapped from this swing all the way back down to when we reverse? No, there are no opposing 15-minute fair value gap. Let me tell you something. If there were one 15-minute fair value gap in this zone, let's say, for example, hypothetically here, you had a bearish gap that was untapped that will essentially travel into this zone. What could have happened? Let me tell you what would have happened. And I've seen this from my backtest data. And that's the reason why I have that specific rule. You would have had price reverse, touch this, and potentially sweep you first or turtle sweep you before delivering your direction. That is one of the main reasons why I have that rule, right? It ensures that by the time when we begin distributing in our direction, you don't have this happening to you. You get turtle swooped. And then it makes your low for your entry a protected low for the entirety of that distribution. Okay. Now, what is the final rule that I mentioned? That's a side rule. We need to make sure that around our entry, we are touching an MPL, right? Are we touching an MPL here? Right there at 800. This is an MPL right here. This is the MPL overlap. This is a crucial rule, right? Confluence, because my model, the Arcane model, literally deliver from major site level. And this is a golden nugget here for anybody that have waited and watched it until the end. This is the reason why this model is extremely powerful. The Arcane A plus model is simply a distribution from a major psychological level. It's mathematics is not just pure price action, it's time and price. It's a distribution from a major psychological level to another major psychological level. All we're doing is simply using price action to help us get from one major psychological level to another major psychological level. That's all we're doing. We're utilizing time and price to time how we want price to deliver from this MPL, from this cycle level to this next cycle level. That's it. Because price on an intraday basis or current trading day would typically move from major cycle level to opposite major cycle level. That's typically price will look to deliver efficiently because it is all numbers, right? It's all data. It is all numbers, right? If you're looking at a chart, the chart is simply a representation of price movement. Now, what do you need in order for you to be able to understand where the high and the low of the day form? OHLC. However, beyond that, what exactly you need to understand where the high, the low, or the open and the close are located? Time and price. The number on the x-axis, and then the time on the x-axis, and then the number on the y-axis, right? So once you start understanding that, you need to pay close attention to numbers pay a close attention to what number represent, where the number that price is heavily drawn towards. And once you see that for yourself, because like I said, I can show you this model 100 times, but until you go with your own eyes and with your own experience and see this for yourself, you are not going to believe it. I promise you that. So with that said, that's all for today's breakdown. I hope this gave you a complete understanding of my Arcane model and what I'm actually doing on those live sessions. If you've been attending some of those live sessions that I do every single morning, you find tremendous value in this trade breakdown. So with that said, if you have any suggestion, anything that you would like me to essentially expand, maybe in my future videos, or any question per se, please let me know in the comment section down below. I'll be happy to go over that. With that said, I'll see you in the next video or next breakdown. Until next time, stay in profit.